Hello, 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 everyone. Mike Owens here, co-founder, patron, and partners with the soon-to-be on Bob Iacchino. We'll get his takes on some ISM, the manufacturing numbers today, and what he thinks about non-farm payroll Friday tomorrow. It's a nice little snapback bottoming potential rally in the markets. George, first in, hello, and hit the like, Mike, and Bob button. Good afternoon, Davey. Hey, Patrick. Hey, Coco. You're just crazy, Coco. Evening, Anissa. Hey, Connor. That's a question for the people in the room who bought the momentum actually came in a little before the close, but we'll review where a great key little stop level is. Hello, Options 22. Anyone else close their position early for what? The head and shoulder patterns? It was pretty close. What is this? Coco says bear trap. AB says bull trap. Hey, Chris, welcome, welcome, welcome. Hey, William Buttercup. I don't know who you're talking about there. All right, with that, if you are new here, please do consider subscribing, helping the channel continue to grow, and come back after and leave some comments and hit the like, Mike, and Bob button. So, long the NASDAQ from the tail of the daily wick. All right. So George is long. I'm expecting a little follow through bounce. But unless non farm payroll throws a monkey wrench in it tomorrow, but that's why you have stops. Let me hit the magic Bob button. Yeah, Bob, you're
Yo,
on.
I'm here.
Hey, we're both wearing blue shirts.
That's not usual. That's not typical. Although my
So,
shirts generally match yours because yours generally have like 9 colors in them.
well, it matches some thing
No,
on my shirt.
we match more than some.
I mean, I'm just such a boring individual. I have to wear a colorful shirt. All right, let's get right to it. Yeah, I'm not gonna. The last two live streams have gone like an hour, so this one I'm gonna try to hold it shorter. I say that, and then I'll be on for 3 hours. Let's get your takes, though. We had the S&P manufacturing PMI, the ISM manufacturing PMI coming out, and their components. What were your takes on that first and foremost?
So the S&P, not much change. This obviously was a revision. We talked about it when the first ones came out. So I didn't see any dramatic revisions across the curve. And by that, I mean Germany, EU, UK, Canada. They all came out. I didn't see any substantial revision that would even be worth talking about. The manufacturing ISM in the US, the PMI from the Institute of Supply Managers, was strong. It was really strong. It was a really, really good number, which of course is bad for the Fed, or I should say bad for the market in relation to what they think the Fed is going to do. Yields, it's interesting because yields across the curve actually fell right after the number came out and then rallied back and made the big jump that they made in toward the close. Toward the end of today, and I was actually just updating as I speak, but toward the end of the day, we were pretty close to, we were getting closer and closer, I should say, to those June 14th high closes for much of the curve. It wasn't every single duration of the yield curve, but it was a lot of them. From the perspective of where we closed, and yields matter versus those June 14th high closes because that's kind of what a lot of bond traders are looking at. The 10-year still 23 ticks away from it. The 5-year still 22 pips away from it. But the 2 year is 6 clicks over it. See that how I just did that? I used clicks, tips, and ticks. The 30-year is only 8 below it. And obviously the 3-month, 113 basis points higher than those June 14th high closes. So what we're seeing is yield steepening, going away from flattening. And a lot of that has to do with this sort of idea that bad news is good news and good news is bad news. I said this Tuesday, and I still think this. Tomorrow's number's bad either way. It's either bad for the equity markets or bad for the economy. It's one of the two. So, as traders, we might call it good news if it pushes stocks with some follow through. I expect some follow through from today as well, just the way that it came in toward the close and kind of popped and held. I would expect follow through, but the non farm payrolls number can turn that around. That's obviously the big deal. Now, back to that ISM number, the employment component was strong, the price component was lower, and the wage component was flat. So, like, you almost couldn't have a better set of numbers unless they were all higher, right? That would be the only thing that would make them all better, unless they were all stronger than where they came out. So, it's a pretty good set of numbers. And I think ISM PMIs are a very good indicator of what's going on in the economy. I just don't believe that one of them is. You need to see a string of them. And the ISMs have been weakening, and they've been weakening dramatically. But we're pretty securely still in expansion territory. And by the way, so is the wage number. The wage number is still in expansion territory. So while it cooled off a little bit, it's still not enough to take the Fed out of the picture or turn it back to 50 basis points. I think we jumped up to over 74% probability.
We're at 74%. When I last refresh, we're at 74%.
74 right on the dot.
Let me just see. I'm refreshing again. If sometimes it freezes during a live stream, but no, it looks like it's going to come through. Drum roll, please. It will. No, we're still working on it. We're still 74. 74
right on the dot.
Yep.
Also, I'm paying really close attention to crude lately. I mean, crude weakening and weakening and weakening. We just got down to the January levels. Second time down here on crude, right? And those January levels sort of coincided with about $3.30 gas at the pump. Obviously not $5, but still high. We're now basically, and we've been for a little while, below pre-Ukraine invasion levels, Russia-Ukraine invasion levels on crude oil and on gasoline specifically. So we're not there on gasoline yet, but we're there on crude oil. So it's interesting to see what's going on with crude because I just did an interview on TD Ameritrade and on crude oil. And I was basically telling them, you know, I've had bearish. I think it was somebody in this live stream. I told them I'd gone bearish neutral. And they asked me how could I possibly still be bearish? Well, that's why I was bearish neutral and not bearish to bullish, right? You just, until you get a bull signal, you can't be bullish. And until you're in a long trade, in my opinion, bullish is kind of a stupid phrase. Trying to figure out why or what direction or how far a market's going to go when you're not even in a trade doesn't make any sense to me. Almost got nothing to base it on.
So, I got to stay long-term bearish until we invalidate this double top with short-term bullish trades in the mix. But other than that, nothing's changed, though, besides that last little sloppy double was a quick trigger and stop.
Yeah, totally agree. I mean, when you look at the way it went, the longer-term double is not even close to violated that weekly double. It's beautiful. It's in great shape.
Yeah, I mean, it needs we need to get a rip your face off rally to invalidate the double.
Mm-hmm.
What else do we see? Oh, did you see the Atlanta Fed GDP nowcast revision today?
I didn't. Where's it at?
2.6.
Wow.
So
Awesome.
Yeah.
Wow. Okay.
So this for the people wanting the Fed to turn dovish, there's not a lot of nice data points out there for a pause or a pivot right now.
Yeah, definitely.
I mean, especially, it takes some massively bad numbers to tip that nowcast back to negative. So I think you're just going to have those 2 quarters, and then we're going to get a positive quarter at least for Q3. And unless there's a shock with with non-farm payrolls, which I'm not expecting some shockingly bad number.
Yeah, I'm not either. So, it's funny. I think if we surprised, we'd surprise positive. And the only reason I say that is because ADP surprised negative. So, from that perspective, the only way you really have a surprise, I'd say, is if just a superbly strong number. And it could be. I'm not expecting any weakness. I'm not expecting any strength. I'm not predicting this number at all. For me, this particular number is going to flip those probabilities for 75 versus 50, or it has the potential to flip it, depending on how this number comes out. So if I were long stocks, I would want basically not even a Goldilocks number. I'd want something slightly worse than Goldilocks.
Well, now the 50 basis point is a new pivot.
I know, right?
I mean, we're going from pivot means they're gonna like literally pause. They're not gonna do a September rate hike too. The pivot is if only a 50 basis point hike.
So for those of you who think like Goldman Sachs knows something, right? That kind of thing. They'd said 75 at this next meeting, 50 at the next, 25 at the one after that, and then they pause. That was Goldman Sachs's interest rate strategist that put that out. So if you're one of those people that believes Goldman Sachs knows something, look out.
I mean, it's gonna take some abysmal data to
Mm-hmm.
really shift at this point.
And Mike, relative to your yield curve research as to when like the market bottoms with your yield curve research,
Mm-hmm.
we, we've moved dramatically flatter
Oh yeah,
from those 43 lows on the twos tens. So I'm not saying we're going back to the normal shape of the twos tens curve anytime soon. I mean, we've got a lot of ground to make up. But you remember the way that you explained it to me, and correct me if I'm wrong, once it goes back to the right way, where it's got a normal shape to it, we see a bottom sometime before or sometime after that happens.
yeah.
So
We
it's
generally see the market sell-offs as we get closer to zero and then start accelerating above zero. You start to see more significant sell-offs.
all right.
So that's another factor why I don't think the June lows are the bottom, unless something really goes haywire with a lot of stuff.
Right. I really
So,
expected some Tom in here today telling us, see, the market always goes up.
do we have see the market always goes up?
Well, Coco's here, but
Oh well, Coco's all over the place. Coco's been drinking too much cocoa. I think it's spiked cocoa.
yeah.
Yep, yeah. Lulu actually hit. Lulu was fascinating. It hit the Head and Shoulders target today, and then the big gap into earnings. Did you see?
Such
Did
I didn't look at it. I mean, I haven't looked at individual stocks this week at all.
yoga
Which
pants are rocking?
honest to God, they have such a loyal following. They remind me of Apple 10 years ago, maybe 15 years ago, when Apple people were just Apple people, and that's it.
I mean, here we had that the sloppy Head and Shoulders coming down today, reversal. In the market reversal, and then the big gap up. So the pattern filled itself, and then you had the reversal.
That's great.
But and by the way, from my perspective, we're putting it, I mean, as I said this morning, we're in severely oversold condition. So, and with cycles at the bottom on the daily, so this is just setting up for a short term rally. Nothing's fundamentally changed, but we're getting, the markets don't go in a straight line, and we've tipped to a very negative position. We're also against this key resistance becoming support from the end of June, beginning of July, that started the breakout from this last bull run. So not surprising. And coming right down, look, we're to 62 and a half. So we watch for that reversal area between the 50 and the 62 and a half. Got the
Mhm.
reversal today. So would not be surprised to see a return possibly to the daily rotation zone.
Hey, real quick, Mike, I'm coming up on a time crunch unfortunately. Today's my wedding anniversary, so I've got to get out of here. But can you just read if there's any of those questions for me? And I'm asking for questions. Otherwise,
Yeah,
I'm probably.
Bob, how much do you think it will cost me to exchange my guns for an F-15?
How many guns do you have? It's really, see, again, we're not financial advisors. I don't know how many guns you have.
We're
None.
not arms dealers either. That's not on the resume. Bob, looks like we are rhyming. I think that was rhyming with '08 crude and gold dropping, preceding the market crash. That's what
Well,
George.
they're just, George, they're just similar situations. I mean, if we're going to an economic slowdown, and if Mike's research is right, the inversion happens, then we come out of the inversion, then well, I know his research is right, but I mean, if that repeats, certainly you'd see the demand side of crude going down, and again with the interest rate adjustments, a strong dollar, you see gold falling. So I mean, it's just those types of things, these situations mirror themselves a lot, simply because that's the dynamics of the markets. I wouldn't look at a market and say, oh, these two things are happening. That's what happened then. Therefore, it's going to happen again.
Yeah, I mean, and it could rhyme.
Yeah.
But that's why it's generally I don't like assuming stuff based off of one data point pattern. Because the second data point that doesn't agree just shifted your probability by half.
Right. Right.
So your 100% thesis went to 50%, which, well, hey, are you going to be around tomorrow morning to pop in
Yeah.
after NFP?
Yeah. I have. Well, you
If you're
start at what
not,
time? No, you start at what time Eastern time? 9 Eastern time?
9 Eastern.
Yeah. I'm going on some CoinDesk TV thing to
Oh,
talk
no.
about payrolls, but that's at 9. So I'll hop on right after that.
Okay.
It's still going around 9:10, 9:15. I'll hop
Well, we
on.
generally go till 9:20, 9:25.
Yeah, I'll be able to hop on then.
All right. Well, then why don't we let you go so you can celebrate your anniversary?
Okay. Sounds good.
You're going on not Coinbase, but CoinDesk.
CoinDesk, their in-house network. I don't know what it's called. I can tell you right now. Hang on a second. They just asked me for notes. Like, I'm not sending you notes. Numbers are going to come out tomorrow. Yeah, CoinDesk TV is what it's called.
CoinDesk TV.
Yeah.
All right. Well, I will wrap up with everybody. If you can jump on tomorrow to help us navigate those numbers.
I'll do the best I can. All right, guys. Cheers, everybody.
Have a great night.
See ya.
All right. Just me. It's back to just like the mic. We'll do a quick recap. Any news on a new stock service? I have to talk to Bob about that. I was just waiting until we got more closer to a decent bottom to launch something. I've got a bunch of stuff. I know all my fundamental scans. I know the technical entries I'm using. So that's all baked in. Now it's just getting it launched, and if I can drum up enough interest, or Bob and I can drum up enough interest, because it is a fair amount of work. Although I like to get the same signals that I generate, so it's but it's still a lot of work, especially with a couple live streams a day than everything else I do. So yeah, I love to do that, especially I don't know if I'd launch it before the end of this year, but definitely something next year to really help people navigate some significant potential market bottoms and then structure a great portfolio coming off of that. That would be a fun thing to do. The SMH did the head and shoulder pattern. I know we already talked about NVIDIA. And the SMH did. And now I'm watching for the gap fill. The gap fill. Now, long term, still very bearish. Short term, watching for the oversold bounce. So that the short-term pattern is, oops, don't do that. Come on. Come on, give me this one. That one is done, just like NVIDIA. Done. Come on. Done. And NVIDIA breaking below the lows and then a little reversal. Now, for all the people who said, I want to buy NVIDIA, there is, so on a break above today's high intraday, potential long trade. Not only you can use your gap harmonics, I could even be more aggressive than that with cycles at the bottom, percent B buy, so it could be traded on an intraday break, especially if the market rallies after non-farm payrolls. Again, can't give you specific trading advice. And then play for a gap fill. And the way I like to do this with stocks, and this works on the broad market, but when you get these reversal bars, and it's not as strong as NVIDIA, but it's pretty decent. The market overall, see NVIDIA put in this really nice bottoming pattern right here. This is a really nice bottoming pattern. Coming down, a big red bar, basing along there, coming back to retest this pausing area. And everybody see what I'm talking about. I'm just trying to teach a pattern that's really nice. So you see this pausing area, and then you finally get the final push down. Then it holds. Then you get the snap rally to retest this area, pause, and then you break through. That is a real, you see how you pause here? And I really like these pauses that stay in the upper. You can put on your harmonics and just use short term. It stays in the upper end of them. And then you break out. That's a really nice pattern. Now for tomorrow, on a break, the short-term break's even above this, so about 140 level, even on a pullback to there, that holds. But then the other pattern is above today's high. What I like to do on these kind of bars, and it's one bar, I'm just showing you on the 4-hour chart, is I like to put on the single bar harmonics. And I know it's 2 bars on the 4-hour chart, but it's 1 bar on the daily bar. That's why I call it the single bar harmonics. And then, you know, my stop level, 136.87, and that's on, I need at least a 15-minute close below that. But that's how I can judge anything with a key stop level, because we should not come back down and close below that. So I have a built-in stop level based off the single bar. Now you can do the same thing, let's just, with the S&P or the spiders or whatever you want. Do the single bar harmonics, okay? And you have a stop level. And you can always use a closer stop, but that's one of your higher probability stops and gives it a little room. So let's say you got long, especially after this pretty key reversal. So we had that line, this 39.42. Remember that gave our shake and bake. Remember the shake and bake this morning? We broke down. So everybody who got long here, I said, watch for that shake and bake. You got it. Then you finally got some rallying. You got back above this key breakout level from this morning and retested a couple times and then holding. So if now holding for a little longer thing, I'm giving it a little more room. And that's where I would use the 62.5. I would not keep a stop above the 50 if you're trying to hold overnight. Personally. That's how I like to do the single bar thing. And that's playing for even in a bear market, we should at least eke out, unless something really strange happens tomorrow, we should easily eke out a 2 to 3 day rally. Now, it doesn't have to be strong. It can be choppy to bullish. Remember, there's even with a more sideways choppiness, it's just letting this rotation zone on the daily catch up. But that's what I'm going to be watching for, the extent of the correction. Remember, the rotation zone will drop. So if you're looking at things like the spiders, you can put on the same, again, spiders. What'd you do? Going in here, you finished your head and shoulders pattern, and then you got the rally. So if you're playing for a reversal, you can always use a tighter stop, but that's one of the stops I like right there. So I think there's a question about 403 tomorrow. We'd need a rip your face off rally for 403 tomorrow. I think I read that right. More so, even on a strong rally, the first area I'm watching for a reaction zone is about 399, which would be the 4-hour rotation zone. It's going to drop a little overnight, but in this vicinity. And then my next key target would be about 402, 402.20. It would take a really killer rally to go beyond that for targets. So just keep that in mind. Now, if we get serious momentum off non-farm payrolls, my opinion can change tomorrow morning. Q's not hitting the full target. We may get a bounce, a substantial bounce before hitting there, given the S&P and a lot of other things hit their targets today. And we filled the gap on the Q's. So we can fine tune this tomorrow, but next key area is about 301.50, then 303.50. There might be a partial day, definitely not a full day. You love the think tank? We'll do something. It'll even be better. Thank you, Alan, for the feedback. You know, I've been listening to you for a while now. When a ticker closed down to 62.5 harmonic, does it bounce back or will it go down more to 75 harmonic? A close, especially in the longer time frames below the 62.5, favors a return to the 87.5 with a intermediate level of the 75. A close between the 50 and the 62.5 is an area to watch for reversals. So, for example, from this, that's why I talk about it, from this down to up move, the reversal zone is between this 50 and 62.5. We came down here. We did not get the daily close below 62.5. We also, this is a pretty substantial 4-hour reversal trigger. We should get a 2 to 3 day bounce at least off of this from the reversal zone. And then I'll be watching for the next down leg. The next close, when it does happen, if it does, I mean, anything can happen in the markets, but we close back below 293.71, then we favor return to the 87.5 by a very strong high probability range, which would be 277. I then use the 75 for either partial profit taking or stop reduction for any short trades. The inverse is true for the longs. Remember, our red lines up here. Let me get to the S&P. Remember our red lines, this was the 50 to 62.5. So this was the area, and I said this on the podcast, Futures Edge. I am recording another one tomorrow. I believe, yeah, I should be recording another one tomorrow, which will release on Monday. So you get to hear me again if you like to hear my new longer-term thoughts. But where did we reverse? Here was the 50, here was the 62.5. Those were the levels based off the highs back at the end of the year to the lows in June. So this was the reversal zone, and I talked about the 200 being key because it's in the middle of the reversal zone. So we came up in the reversal zone, we rolled over. If we had closed above 403.68, then statistically that would have favored the higher price levels back up to that 87.5. Again, not 100% guaranteed. I have not found anything 100% guaranteed in the markets. And also on these like things like the S&P, yes, it's a percent B buy on a daily close, but this could be played with a break above today's high and then rolled into a daily close or just used as a day trade, because the probabilities if it is going to get the close above here is for at least short-term higher prices, and that would be for a minor corrective pop, not a long. This is not a long-term bottom. This would be a corrective move at this point. All right, you got it, John? So what I am trying to do here, let's see, George, much love. Your lessons are turning your portfolio around. What I'm trying to help people understand is if you have a set methodology and you use the probabilities, you can come up with a roadmap. Just like you'd plan out a road trip. Now, you can plan out a road trip and you can get partway into it. You know, you can have all your routes planned out, your hotel stops planned out. Let's say there's a major horrific accident, they close down a road. Yeah, you might have to backtrack or take a significant detour. Did that invalidate your planning with the road trip? No. That's part with trading. We get a roadmap. Now, things can happen. You can get a severe accident. You can get severe weather where you have to pull over. I mean, you could be stuck in a blizzard. However, that's part of your thought process and part of your planning, but you still plan out the roadmap. So this, what I'm trying to teach people is you plan out the roadmap, and even the best laid plans on a road trip, I know, even on I've been stuck in a major catastrophe on an interstate by something that was completely unplanned. Did it make my planning wrong? Did it make my road trip wrong? No, it's just that there was something that came up and now I have to deal with it, just like with trading. That's why you use stops. That's why you have contingencies. So, I guess one of my overarching goals I've been trying to teach during these tactile trading times is to help people come up with a methodology so you can come up with a roadmap. And you'll see a number of targets hit. You'll also see me say, hey, stop hit, because that's, hey, detour, stop hit, take your loss, go on to the next trade. It happens. The great thing is when you have a roadmap, at least you can start plotting things out instead of where do I start analyzing this? What do I do? Let me listen to see what CNBC says. Don't. Learn to do your own stuff. And I'm glad to hear you're turning around your portfolio. And I hope these lessons stick with you the rest of your trading and investing career. Because then you'll always be able to navigate something. Doesn't mean you're going to get 100% winners. There is nothing like that. I just wanted to clarify this because we haven't touched on this in a while. ARC hit the first target on the double bottom and then reversed around and hit the key stop level. I don't know why I must have pulled that off earlier. But this did, I forgot to update this the other day. After hitting this, let's go from here. It's close enough. Close below 62.5. If there's anything remaining, now, again, being ARC was personally using much more aggressive stops, but that would have been the last line in the sand. Now, also ARC closed below 62.5. So even on a bounce play, we should still see 37.45 to 35.10 over the next while after this bounce play. But now we have a roadmap based off probabilities. Will Frey fill the gap or short-term go up? Based off this price action, I'd watch for some. Can you still which gap? You mean this bigger gap down here? Because it filled this gap today. Based off this price action, I'd watch for a continued some follow through rally and then another rollover play. And my key resistance area based off this for any bounce would be 1308 to about 1341. And then I'd watch for, as long as we don't, something weird doesn't happen with non-farm payrolls tomorrow, I'd watch for continued follow through. Why? I mean, that would be a bounce, and then I'd watch for the bigger rollover because you'd have daily cycle still rolling over and weekly rolling over. So this correction's not done, but I'd watch for a little more bounce and then another substantial rollover play in that. So would I be aggressively buying something like this? No. Interesting enough, if you get that nice little bounce or rollover play from it's going to be one of those horizontal, not downward sloping. But I mean, some people trade that as a head and shoulders top. I just play it for the gap play. HQY, hey Dimitri. Then I'm calling it a day. I gotta deal with some stuff. Ooh. HQY. We had a pretty decent rally today in healthcare stuff. HQY, oof, back above the 200. Got this consolidation pattern. On a follow through to the upside, I don't have the last great buy was back. This was the last key buy signal with a close below that low. And I really implore people to use stops on a closing basis. This was the buy signal. This didn't stop it out. This didn't stop it out. Right now, you're getting into a very toppy area. I'd be trailing a stop from a long position with a target of 68.90. And I'd be trailing a stop. And I'm just going to use this as a hypothetical buy position. First cross rotation zone, pullback, hypothetical buy position. You have your 50% harmonic right there. Got above, retesting. So that would be a key level for a trailing stop. If this was a hypothetical buy position. That would be a stop raise at this point. And then you break through, you get a close above the 75. Then my next area would be a stop raise of around 64.95. And my target would be 68.92. Not only is it the harmonic, it's right in front of the 69 level. And no, that's not an Elon related joke. It's actually the 69 level. And why is that very key? Because you had some selling pressure up here. You had some selling pressure up here. So, and if you didn't want to do it there, I'd definitely be taking a partial profit up here. And then continuing, if you were still bullish, continuing to trail a stop. Weekly cycles getting to the top. Daily cycles at the top starting to roll over. So you might get one more push higher. You don't have a divergence, interesting enough. We might get another push higher to take out that 87.5. And then I would not want to be pushing this based off the cyclical patterns and the prior selling area. Does that make sense, Dimitri? That's how personally I would trade it. Now, if you were long lower, I'd still use that same stops. If you got long higher, I'd have to give it, it still wouldn't be at a break-even stop. I'd still use roughly the same stop. Why? Because you get a close back below this 50%. It now didn't hold this breakout area, didn't roughly hold the rotation zone, and cycles will be guaranteed to roll over then. So I'd be watching for a return at probably to the 200-day. I'm still working on them. Genomic, everybody will know when they're released. Can we look at end phase? And that's the last one. You guys should know how to do this now. How many people are actually going to buy training modules? If you're here in the, give me some kind of in. I'm just wondering. Are you? Because a lot of people say they're going to do stuff and then they don't, and it's taking a lot of my time. I mean, I'm going to get them out there no matter what. End phase. That again, that double turned into a multi-top. It's still 268. That would be from a long perspective. Close below 268 is the stop level. Now, just for your stuff, when we do end phase, I'm starting to watch for the bigger rollover play at some point. You do have right now. You have daily cycles coming back to the bottom. Weekly cycles heading back down. We might get one more push, nice push higher, but that would be a pretty significant top. The trailing stop would be 268. Thanks, American. Well, where are you from, Dimitri? What do I call you? If I'm American, actually, I'm both. I'm American and Canadian because I was born in Canada. I got dual citizenship. So you can't just call me American. I'm a dual American. Ah, Ted will. All right. So, with that, oh, by the way, see, here's another thing. Remember we stopped out that the inverse head and shoulders, close below 62.5. What does this favor? This, because this is another trade. So this could easily be flipped to another trade because we should still see 115.07 to 114.07.5 for your notes. Even if you get a little pop on the notes, we should still see another substantial rollover play based off the probabilities of that close below 62.5. North American, there you go, Dimitri. I'm now North American. All right, with that, I'm going to wrap it up for now. Thank you, everyone, for being here. I will be back tomorrow morning. Hopefully, Bob can join us after non-farm payrolls. Again, we're expecting a follow-through bounce, and we know where our stop levels would be based off of those single bar harmonics. So we have a roadmap. With that, I will wrap up the Atlas for today, and we will talk to everyone tomorrow. Have a great evening. Bye for now.